Welcome back to the Means Report, everybody. So happy to have you with us, especially as we get into the second quarter of 2011 and talk about your finances. I know that by the time this broadcast airs, tax day will have come and gone. And if you didn't get the results you were looking for this tax season, then pay attention. Maybe we can make 2011 and beyond a lot more prosperous for you and a lot more better managed. I know we can. Jeff Fehrman is back with us again. He is our in-house investment advisor with the Fehrman Group. And Jeff, thank you so much for taking the time to be back with us as we do kick off the second quarter. We appreciate it.
Glad to be back with you after an exciting Masters week and beautiful weather.
It was perfect.
Fantastic.
Great weather, and I got sunburned the first day. My head peeled, actually, so I'm almost all back to normal now. I envision myself as having a thicker head of hair than I do, and I'm going to just start wearing a baseball cap every time I'm out there from now on. It was a beautiful week for sure. We want to talk about something that's not so beautiful, and that's global events that have been occurring and how those events might have an impact on our economy. And this first question, Jeff, is something I have actually been thinking about, just watching it on the news as it unfolds, and that's the earthquake and tsunami, now earthquakes and tsunami in Japan. It seems so far away. Our hearts go out to the Japanese people. How are those events having an effect on our economy, or are they yet?
Yeah, well, I don't know about yet, but as our viewers know, this is certainly going to be a huge economic impact. The human impact and the emotional impact is a tragedy, but more importantly, what we want to talk about today is it having an impact, or what is the potential impact for our economy here? Well, in Japan, there's two answers to that. In the Japanese market, we predicted growth in their market of 1% to 2% over the next year. So we felt like their economy was going to grow. We believe this impact from this tragedy is going to probably bring them back to zero growth or slightly negative, which isn't good for them, but again, it's a short-term impact. Longer term, we think that that'll come back around.
Well, so might Japan experience what we went through last year and in the years previous, where there's just this huge slowdown? Are they headed down that road?
We don't think that's a huge slowdown, Brad. We believe that the slowdown will be short term. Long term, you could actually see a bounce back, kind of like we saw in the Gulf. The other impact it has for us here domestically is about 5% of our exports go to Japan. Of that total, our economy is about 10% exports. So it could have maybe a 0.25% impact on our bottom line growth, even here domestically.
Might it have an impact if you want to buy a Japanese car?
It certainly could, especially from the timing perspective. You know, that's the bigger issue, is how much slowdown, because it's such a global marketplace, how much slowdown happens because you're waiting on parts to put something together type of thing.
What about the Middle East and North Africa? Also upheaval there. There seems to be constant instability. Is that going to trickle back to us?
Well, it already has trickled back to us more immediately than we saw in Japan. You're right, the trickle back happens quicker in the Middle East because of the oil impact. Japan has a big impact because of their technology, the products they produce, but oil is a quick felt impact. So we've already seen oil prices over $100 a barrel. We hope that that'll be a short-term impact. If that's the case, we believe that won't stall out our economic growth here domestically. But we do also think that if we see oil prices rise to $130, $140 a barrel and stay there, it could have some significant longer-term impacts on our economy here domestically.
All right, well, as we're flirting with $4 a gallon at the pump these days, and the summer travel season imminent, do you see gas prices going down at all? Any help there?
I don't think short term we're going to see those gas prices decreasing. I hope I'm dead wrong about that. And I think we're flirting with that area you touched on, of where consumers aren't going to make a strategic change yet on their habits. But if we continue to see increases or stay at these rates, they could start to change habits, certainly.
Well, what about the real estate and housing markets? We always want to touch on those. Can you see anything as the year really gets underway in those markets?
Yeah, that's kind of a good news, bad news in the real estate marketplace. The real estate marketplace, we're continuing to see foreclosures, which is bad news. We are seeing some of the excess inventory burn off, which is good news. But we're seeing some price stability, which is good news. Unfortunately, we're not seeing any pricing power for homeowners to be able to raise prices on their homes, or builders. And a lot of times, housing is a driver for economic growth, and we're not seeing that right now. And I think we're a couple years away from that. We need to get some of this inventory burn off, and that's really true locally as well as nationally before we're going to see good pricing power in the real estate markets and more housing builds happening, which generates a good economy.
So still a buyer's market.
is definitely a buyer's market in real estate. We see that over and over.
Let's talk about some positive news, if there is any. We've talked about the negative side of the economy and of the of our finances, if you will, as the first quarter is behind us. What about any positive signs you see?
There's a lot of positive signs, and I'm kind of a positive guy, and we started with the negative, but let's end with the positives. The positives really are, first, corporations. We're seeing two things happen in corporate America. First of all, a lot of mergers and acquisitions. That's important, not so much for us personally, but that tends to be a precursor to companies feeling good about the economy. So that means corporate executives feel good about what's going on. Secondly, and we've talked about this in the past, we're seeing record profits at corporations. So companies are making money, they're very efficient, and that's going to lead to hiring. And that's really our second good news, which hasn't been good news probably the last year and a half, which is unemployment. It's still generally, from a numbers perspective, bad news, but the direction of it is good news. We broke 8% or 9% unemployment. We're at about 8.8%. Good news in March, we had 230,000 private sector jobs added. Not quite that much as a total because we have some layoffs in local municipalities throughout the country, but good job growth in March. We also saw a recent study from the Business Roundtable, which is essentially a group of large companies, CEOs. They do some different surveys, and what they put out in a recent survey is 52% of those CEOs said they plan to add jobs, which that number doesn't seem huge, but it's the highest percentage since 2002.
Well, that having been said, would you say that there is hope for people watching today who are unemployed, who have been laid off, about re-entering the workforce? Is this maybe their year?
I sure hope so. I mean, you hate to see anybody. I still think it's a hiring market, so people that are hiring are going to go through a lot of people, but I think they have a better chance than ever of finding a job. And I think you got to use your contacts. You really got to beat the bushes and work hard at it, frankly.
Jeff, one of the things I like about having you here is you always give advice that can apply to anyone of any economic level. What about people who are getting tax refunds this time of year? Just from listening around the workplace, I hear someone say, I'm getting $1,000 back, or I'm getting $2,000. It always seems to be around the $1,000 to $3,000 range for refunds that I pick up on just listening. Anything smart other than racing to Best Buy and getting a stereo or something that we could do that would help us financially?
Yeah.
With that amount of money?
I think so. You know, it may not be as fun. I like the Best Buy idea because I'm a technology guy, but that's not. I don't know if it's not smart, but it's certainly more fun. I think in order of what you should do with that, first, if you got high credit card debt, pay that down. That's a no-brainer. So credit card debt, if you don't have that, look at the emergency fund. If you filled that up, you have some money set aside, and then really take a hard look at your longer-term goals. So it's really just overlay that money on what your longer-term goals and try to figure out what do I tackle first. And maybe it's the Roth IRA or a college fund or something longer-term. But I think the easiest is just the simple debt pay down, making sure the emergency fund's there, and just going back to those core basics.
If people go to the Fehrman Investment Group to help manage their money, and it's just somebody who is maybe a middle-of-the-road guy or gal who's trying to just get ahead in life, how specific are your money management strategies as far as working out a financial plan, telling these people how to stick to a budget? Do you pay the bills for them, or do you print out, here's exactly what you need to do with your paycheck?
Yeah, we wouldn't pay your bills for you, so to speak.
With your money.
Yeah, exactly. But we would help you lay out a budget, what we call the reverse budget sometimes, of laying out, here's your budget, here's what you need to save for retirement, kind of autopilot on that. We've talked about that in the past. But we will go through an excruciating amount of detail or do a bigger picture. It really depends on the client, how much detail they need and what they're trying to accomplish, Brad.
What can you say that might help somebody reevaluate their investments and long-term, as we've talked about, meet their goals? Anything that could be helpful at this point?
Yeah, I think the one that we're really taking a hard look at today is the risk matrix. And what I mean by that is people right now just view risk is my risk of losing principal, which is one of the many risks that we evaluate. But if that's the only risk you're looking at, you're only looking at a small piece of the puzzle. So my advice today would be is relook at your risk in your portfolio. That's always important, but don't just focus on what if the stock market goes down. Look at what's my risk if I'm too conservative of not building enough wealth to accomplish my goals. So you really need to step back, take that bigger picture look, and look at all the other risks, not just the risk of stocks go down this week type of thing.
You like any type of stock these days?
I still think the diversified portfolio, the world is so volatile, it's a hard place to just pick one thing, in my opinion, and a risky way to do it.
It is. It is a risky way to do it. You always want to think conservative and long-term, and you've preached that ever since you've been here.
I know. I'm kind of slow and boring on that front.
But it's smart. It's smart. That wins the race.
That's right.
Well, we appreciate you being with us. A lot of advice that you've imparted today. There's a lot more advice if you check out the Fehrman Investment Group's website. It's on your television screen right now, FehrmanInvestmentGroup.com. Jeff and his people will be happy to help you with some of the things that he's talked about today and more advice as well if you want to give him a call or just log on. Jeff, thank you so much as always.
Thanks for having us.
Yes,
good to be here.
Appreciate it very much. You'll be able to help give your ideas about future editions of the Means Report in just a moment. If you like what Jeff said, if you have more questions for him, we'll tell you how to submit those and how we can make sure we pass them along to the right people as the Means Report continues.